Hello everyone. Apportion in partner with ClearTax welcome you all to this exciting session on tax planning. I would like to thank Mr. Dwani Mehta, Director of the Apportion HR, for this initiative of the Open Tax Seminar for the Apportion Connects. Apportion HR and ClearTax are the tightly integrated for all the employee benefits of the financial needs and the tax planning. I am Rishabh Panpalia, working as a direct tax expert, and I'll try to make this session more interactive one. In case of any queries during the session, you can just drop down in the chat box. My friend Sekat is there who will just look after that thing, and even after once I am done with the PPT presentation, I'll be taking a few questions. So the today's topic here is to ELSS versus other tax saving investments and how you can make the right choice about this. So yeah, without any further delay, now let's just dive into our today's agenda, and we are going to discuss about what is ELSS and what are its features, what are the benefits, and how to pick up the best ELSS funds, and then best ELSS funds to invest in 2022. And then apart from the additional deductions beyond the ATC, apart from the ELSS, and lastly, we will come to the claiming of the medical expenditures, that is section 80D. So firstly, the brief about the ELSS, and then the thing is then the comparison of ELSS with the other tax saving instruments, how you can pick yourself the best ELSS fund using the Black app, which is one of the app of the ClearTax. You can download it from the Google, and it will help you in lot many ways that I'll explain you in the later upcoming slides. So then, what is the best ELSS funds? In 2022, we have that as well, and then additional reductions, like I said, beyond ATC. So yes, apart from ATC, we have other investment modes. Apart from ELSs, we have other investment modes in ATC. We are going to further discuss that. That is like medical expenditures and education loan. So let's just start with ELSs. What do you understand by ELSs? So, when you embark on an investment journey, you are often confronted with the questions that the products that you can work for best for you. So, ELSS is one such instrument that probably works on both returns and the tax saving aspects, and it is a diversified equity scheme that not only helps you in achieving long term financial goals but also helps you to get a tax deduction benefit of up to rupees 1.5 lakh from your investments. So under section ATC, ELSS comes with a mandatory lock-in period of 3 years, which means you can redeem or switch during this duration. Therefore, it becomes extremely important to choose the right scheme for yourself to get the best results. There are some benefits of the ELSS that I'll be dealing. That is, you have the shortest lock-in period, like I told you, that is for 3 years. And the very first of all, it gives you the equity exposure. By equity exposure, I mean ELSS funds are equity oriented hybrid funds with most of the investment done in equity and equity related product. So you might already know the potential of the share market. I'm presuming it here that you guys know the stock market. So it will help you to generate the excellent results on long term basis. So apart from ELSS fund, no other tax saving instrument under ATC offers such high exposure and equity, and this is why an ELSS fund, the chances of capital appreciation are higher. And this was the first benefit. Moving on to the next one is that it gives you the shortest lock-in period. I told you that. So when we compare it with different tax saving options, like they have their own lock-in periods. Say for example, tax savings FDs. FDs have a lock-in period of 5 years, and then EPS, employee pension scheme, that comes up with the 15 years, and then NSC is with 5 years. So as compared to all these options, ELSS funds have the shortest lock-in period of 3 years, and this means that you could redeem your fund after 3 years. But I generally would recommend you that you should remain invested as long as possible or feasible for you for the long-term capital growth. Moving on to the next benefit, it is like to invest into ELSS is that it provides you the better flexibility as compared to the other tax saving investment options. Say, for example, a lot of investors, after investing in ULIP fund, were unhappy with the fund performance. So, in such cases, the only option that they have is to invest in another funds offered by that ULIP. But that is not the case in the ELSS funds. You have the flexibility to move to the ELSS scheme of any other AMCs, or even other funds of the same or the other AMCs, without getting into the deal that you would last for multiple years. The most popular tax saving options under ATC requires you to invest lump sum amount, but that is not the case in the ELSS funds. But if you are investing into ELSS, you can start with an SIP option, with which you can start investing with minimum 500 rupees per month. So in a financial year, you can invest up to like 1.5 lakh in ELSS fund to gain the ATC benefits. And so you can break this amount like into a monthly SIPs. By SIPs, I mean the systematic investment plan. Like suppose you have to invest 1.5 lakh, so you can divide it into 12,500 per month as a SIP to gain the tax benefits without investing a lump sum amount. Then the another benefit, it is like it is a fully online hassle free process. It is ease of starting the investment. Most of the AMCs now have the online portals. You might be aware of this thing, right, from where you can begin your investments within minutes, unlike the other tax saving options where it involves a lot of paperwork. ELSS online investment is very easy and quick. Moreover, after investing, you can easily track your portfolio performance online only. On a daily basis, you can track it. So the conclusion of all this, what are the benefits? Why save taxes? Why ELSS is? If you are looking for the best saving taxation option under ATC, it is ELSS. But you need to go through the benefits above mentioned thoroughly, and decision would definitely be easier. So moving on, before investing, we make sure that you first try to understand how ELSS works, fund works, and the risk which are involved to avoid any kind of a problem in the future. And always, we need to spend an ample time to read the offer document before you do the transaction or sign on the dotted line. Now the question comes at how you can invest into your ELSS. So you can invest in the ELSS the same way that you invest in any kind of your mutual fund. Easiest way is through the online investment service account. You can invest either lump sum or via systematic investment plan route. SIPs, I am saying SIPs because it ensures regularity and discipline and reduce the risk to the capital. So you can invest as minimum as 500 rupees in an ELSS fund, while you can also claim the tax benefit up to rupees 1.5 lakh. You are free to invest as much as you like, but it is just that the minimum amount also needs to invest is 500. There is no maximum limit. Now, if we do the comparison of ELSS with other tax saving instrument, ELSS funds provide the shortest lock-in period, and the return, it gives a return of around 10 to 12%. So the tax on this on the returns which you will earn will be a long-term capital gain tax. And coming on to the next tax saving instrument, there is tax savings FDs. But again, if we look for the tax savings FDs tenure, it will be a minimum 5 years lock-in period, and it gives you a return of only 5 to 6%. And the tax rate which will be applicable on the tax savings FDs will be the normal income tax slab rates which you are falling into. So comparing now, like, supposingly if we take another tax instrument like national saving certificates, it is also again you have a 5 years lock-in period, and it gives you a return of 7 to 8%. And the tax which will be attracted on this will be again income tax slab rates which you are falling into. So then you are if you are investing in the PPF, that is the public provident fund, then your lock-in period will be of 15 years, and your return will be somewhere around 7 to 8%. So there will be no tax on this if you are like if it get matures, there will be no tax on that. But if you're also investing in NPS, then in this your login period will be up to, again you will have to invest up to like at the age of 60 years. So it means that the age of 60 you have to continuously invest into NPS, and the return which you will be get on this will be around 8 to 10%. And regarding its taxation part, it will be partially taxable. Whatever amount you'll withdraw, that will be taxable. So it is clear that the ELSS funds are far better than the other tax saving instruments with the lowest lock-in period, and that is of 3 years, and the better returns. So they are more tax efficient. So, if you are seeking a good tax saving investment options, ELSS mutual funds are the great choice, no doubt. How you can pick up the best options? I told you, like I told you, there's a black app designed by the Clear Tax itself. You can just download it from the Google. I mean from the Play Store, and see when you are like when you open the black app, you will see that there are various kinds of options available over there, and also the history, that what are the return rates, what are the investments you can make into. So there are some kind of the best ELSS funds which you can invest in 2022. I'll just show name them. They are the Access Long-Term Equity Fund, the Canara Robeco Equity Tax Saver Fund, the Mirai Asset Tax Saver Fund, and then Invesco India Tax Plan Fund, and then DSP Tax Saver Fund. So these are the few ELSS funds which are giving a high returns in the year 2022. So when you will open the black app, you'll see that how much tax you can save by investing in this kind of a funds. All the options with the sequence wise, it will be available on the black app. Equity and debt, both the funds, if you want to invest either into equity options, is available there. If you want to invest in debt fund, those are also mentioned there. So if you want to invest in ELSS funds, then all the options which will be the best for you, those will be available there. As per your income, whatever your income is, like how much you want to expand, how much you want to invest, accordingly you will have to make the right choice by selecting that thing, which ELSS funds you have to using the black app. And it is very user friendly. You can also do these things either by yourself or only by just starting an SIP of a minimum, like I said, a minimum 500 rupees a month. You can start that an SIP. So now you can also pick the best investment option. Apart from ELSS, we have another investment options there. So for that, you have to keep in mind, like there are some pointers while you choose for the ELSS funds. You need to keep in mind the market cap composition of the portfolio. ELSS funds like the multi-cap scenes that consist of mix of small, mid, and the large capitalization stocks. So in the case of ELSS, these funds houses have the liberty to create a high concentration in the stock of the particular capitalization. ELSS with the higher concentration in the large cap, and it also has a greater concentration in the mid or the small cap stocks. So there are very comparatively volatile. Like I am talking about the mid and small caps. These are comparatively volatile as it carries the higher risk and the same time have the potential to generate a greater return depending upon what kind of an investment, how much you're investing in, and what risk appetite you have. With that will help you out to select the appropriate mutual fund scheme that, and what financial goals and what time you want to like keep be invested. So then you have to understand, apart from the market capitalization, you need to understand the concentration risk and over diversifications. So different ELSS funds adopt different types of strategies for maintaining balanced portfolio in terms of, say, stock concentration and diversification. Some funds may need a higher percentage of overall, like some funds may need a higher percentage of the overall portfolio in your stocks, whereas some may rely on the diversified portfolio and invest an almost equal portion in all the stocks in your portfolio. Let us understand this with another example. Like, so say for example, if you have a fund named XYZ mutual fund, which holds a portfolio of around 100 stocks, and the corporate is evenly distributed in all these stocks, so that this is a well diversified portfolio, while a highly concentrated portfolio carries high risk, and over the diversified portfolio often dilutes the returns and the rating capacity of the fund. So, and it may fail to offer a good return in the future, even during the bullish market. So, when you are selecting the ELSS funds, focus on such schemes which are neither over diversified nor highly concentrated. Simply prefer a fund that has an adequately diversified port for you. Now you also have to check, apart from this diversification, you need to check the expense ratio. So by expense ratio, I mean the total expenses incurred with the total fund expenses incurred with respect to the total managing fund of the operating expenses. So higher the expenses bring down your return, like on the investment, return on investment to that extent. So while investing into ELSS, look for the mutual fund schemes with the lowest expense ratio. Like lowest the expense ratio will be, higher will be your profit. While the overall performance of the fund should be at par and or above the category return, you have to also check the basic parameters. By basic parameters, you need to check some crucial basic aspects such as past performance, fund managers reputation, etc. Past performance may not always indicate that the future of the fund will be the same, but it often help you in just estimating the capability of the uh, fund management under the different market conditions. Similarly, if the fund manager continuously performs well for a long time and there is no significant change in the fund manager and in the market also, then it may indicate that the such mutual fund scheme may repeat its performance uh, under the similar market conditions. So, lastly, what you have to do is compare the ELSS funds with the other equity funds you have invested into. And while investing into ELSS funds, check that out of your existing investments in the mutual funds and avoid duplicating their portfolio structures and investment style. So, choosing the different types of ELSS funds can help you to properly diversify and ensure a better return on investments. So these are all the things which will be available on the Black app. You need to just download the app and study that app thoroughly, and you will able to find that each and every return, or I can say each and every portfolio which you'll see over there will give you a brief about that investment which you have made. So moving on to the next, then if you are new to the investing in the mutual fund, you may consider taking the help of the assisted, like seasoned investment advisor, or invest with the help of the mutual fund distributors. But if you are well versed with the mutual fund and can help the right mutual fund scheme, you may also prefer direct investments in the mutual fund. Whatever ELSS schemes you choose, you just stick to it for a longer period to gain a greater gain and get greater capital gain. As I said it, investing in ELSS will help you not just making the higher returns, but it will also help you to save your taxes. So because this investments, whatever you are making will make into ELSS will come under section like deductions of ATC. So investment options available under ATC, apart from apart from this ATC, is the health insurance premium NPS. I'll tell you the other investment ATC investments option also, what you can invest into and what will be its benefit. So talking about the other attributes of ATC, if I talk about the EPF, your EPF, that is the Employee Provident Fund, this amount, whatever the investments you will be making into EPF, it will be reduced from your salary. Your employer will be showing that thing into a particular form 16 under part B, and it will be coming directly under ATC deductions. So if EPF will be done directly by your employer, then if you have any kind of a life insurance policy or plan, if you have taken in any premium you are paying on it, you can take the deduction of the premium paid under ATC only. And the person, generally I have seen that person take the life insurance policy not just for the tax exemption, but also for securing his or her family. So why not take the deduction of that under ATC? Again, mark the limit of ATC is 1,50,000. So, like I was saying that if you are having any unit link insurance plan, also if you are looking for a long term investment, then ULIP is a good tax saving instrument. It offers insurance to your investments. Then your premium is invested into either the debt markets or the equity markets, offering you the tax free returns. So you can expect a good return from ULIP only if you invest minimum for around 10 to 12 years. So ULIP is a tax saving instrument tool that allows you to switch between the equity and debt. Then another option of the ATC is PPF. That is the one most preferred option for the tax benefits. But this long-term saving scheme has a lock-in period of again 15 years, and it can also be extended for a block of another 5 years. So the annual investment limit has been increased to 1.5 lakh. PPF account can be started either with any banks or the post office. You can invest anything from again 500 to 1.5 lakh. 1.5 lakh is the maximum as installments or the lump sum amount, whatever is preferable to you, then it is one of the best tax saving instrument. Who are not covered under EPF. If you're already covered under EPF, I won't suggest you to go for the PPF, rather go for an ELSS. But if you are having your own business or a profession, or you're self-employed and you have the risk averse investors, then you can go with the PPF, and you can either go with the Sukanya Samriddhi Yojana or the National Savings Certificate. Or if you're also paying like in case if in a year you have paid children tuition fees, then that amount also will be coming under ATC deduction. But altogether, like I said, ATC, ATCCC and ATCCD, The total limit will be 1,50,000. So these were all regarding ATC. Uh, no, one more thing. If you are having a home loan, then your home loan will consist of like your EMI will consist of two parts. That is the interest portion and the principal portion. So the interest portions will get covered under income from house property. You can take the deduction up to 2 lakhs under section 24, and the remaining principal portion you can again like whatever principal you have paid in an year, you can take a deduction of that thing under ATC. But again here the limit maximum will be 1,50,000 only. You can invest maximum amount whatever you want to invest, and actually it totally depends upon your wish how but I would suggest you need to invest minimum 1.5 lakhs. So if you have invested fully in ATC limit and your 1.5 lakh limit has been exhausted, we have another options, that is NPS. NPS is covered under section 80 CCD 1B. NPS stands for the National Pension Scheme. There are this limit of 50,000. It is apart from that 1,50,000 what was in ATC. So ATC and 80 CCD gives you a total deduction of 1,50,000 plus 50, that is 2 lakhs. So you can invest either in NPS. NPS actually, like you can see on the PPT, there are two accounts. If you're concerned about your retirement and you're looking forward to plan with the tax saving benefits, then NPS is the best tax saving instrument. Like the status NPS, as you can see in this slide, that NPS tier 1 account is a default account, and NPS tier 2 account is a voluntary account. The withdrawals in NPS tier 1 account is not permitted, and withdrawals in the tier 2 account is permitted. Here likewise I told you the limit will be ATC 1,50,000 and ATCCD it again 50,000. That is total up to 2 lakhs. And here this we do not get any deduction if we are not a government employees under NPS tier 2 account. Only the government employees can take a deduction of around 1.5 lakh. And then minimum NPS contribution, again it is, you can start with minimum 500 or 1,000 per annum. And here in NPS tier 2 account it will be rupees 250. You can start with 250. And maximum contribution, and there's no such limit on in under both the accounts. So likewise I told you there are two accounts. You can contribute whatever amount you wish to as per your investment, as per your salary, and as per your whole planning, like how much you want to invest in the plans. So this was about the NPS account. Also from the two accounts you can altogether claim rupees 2 lakhs benefits. Then talking about the next tax saving instrument, the next tax saving apart from the ATC. So in that, if I talk about ATD, which says the medical insurance or the medical expenses. If you have taken any medical insurance either for yourself or the spouse and the child, and you are below the age of 60, then you can and you're paying a premium of 25,000, you can take like maximum 25,000 premium is allowed if you're below 60. And in case if you have taken the medical insurance for your parents, then it will be if their age is below 60, then again another 25,000 limit will be allowed to you. And in case if they are above 60, then you can take 50. This limit of 25,000 will be increased to the 50,000. And supposingly if your parents are uninsured, you haven't taken any insurance policy, and you have incurred any medical expenditure for them, so you can take a deduction of another rupees 50,000. Apart from this, the next section is ATDD, that is medical treatment for the handicapped dependent. So this was like if you are incurring any kind of a medical treatment or handicap dependent, and if the disability is for the handicap disability and disability is up to 40% or more but less than 80%, then you straight away get a flat deduction of rupees 75,000. But if the disability is 80% or more, then you have getting a flat deduction of rupees 1,25,000. If you have taken a medical expenditure or incurring the medical expenditure on the medical inspect on the self or the dependent or for the specified diseases, then there is section 80 ddb, and lower of the two amounts by here means if you are less than 60 years, if you have incurred any medical expenditure, so the actual amount paid or 40,000, whichever is lower will be allowed as a deduction. But if you are more than 60 years old and you have incurred whatever medical expenditure you have incurred or 1 lakh, whichever is lower will be allowed you as a deduction. So then if you are yourself suffering, the next is like you're in case if you're yourself suffering from the disability, then you can claim under section like straight away. If your physical disability is like around like blindness or mental retardedness, then the 75,000 straight away standard deduction. And if it is more severe, then you can claim around 1,25,000. Then moving on to the next section, that is 80E, interest on education loan. Like if you have taken any education loan for any kind of studies, like say foreign studies or in India, or also you if you have taken a loan, so only the interest portion of that loan, that is the interest part, will be allowed as a tax deduction under section 80E, and not the principal part like it was in the home loan thing. So the good thing about this section is that there is no limit on maximum limit of how much you can claim the deductions. Whatever will be the interest amount which you are paying on the education loan will be allowed as the whole amount under section 80E, and but not, I just mark that thing, not the principal part of the EMI. So only thing in this section we need to keep in mind that interest which you're paying for a period of 8 years will be allowed as a tax deduction. So it is always advisable to have an education loan, and we need to try to repay it within the period of 8 years. Then only you will be allowed to get the full interest paid claim. Yeah, so this was all about the deduction part, and here you came to know like more about the ELSS, why ELSS is good amongst the other tax saving instruments, what are its benefits, and how you yourself can invest in ELSS or any other kind of a tax saving instrument. I told you how to use the Black app. So I just request you once all to download that app and see that how beneficial that app is for. So this was all it. Like I told you, I'll be taking up a few questions. So I hope you got the clarity about the ELSS. So if you guys have any question, you can shoot up right now. I'll just look at. I guess there are no questions. So we'll wrap up the session here. Thank you so much, guys, for attending this session.